What's going on, guys? Bexio back, and today we got Bitcoin crashing. It's absolutely plummeting. A lot of people worried, a lot of people upset, and a lot of people calling for the death of Bitcoin, which kind of makes sense because this is the first time ever that Bitcoin has fallen below its previous all-time high. 2017, I think, was like 19,500, and Bitcoin is below that for the first time in its history of trading, which is worrisome. But if you look deeper into Bitcoin, the fundamentals, nothing's changed. If you're extremely worried just because of the price moving, makes sense. Everyone doesn't like it, hurts, but nothing fundamentally changed with Bitcoin. No double spend problem, no inflation bug, nothing crazy, and it still works as intended. Block after block, doesn't matter what the price is doing. So we do have just look out to the macro stuff going on. A lot of that is forcing some downward pressure on Bitcoin, on top of having liquidation bounties that people are running after to try and get, and the collapses of things like Celsius, 3AC. We now have even bigger, like, name brand kind of platforms that offer this yield stuff, like Voyager and BlockFi. They're even in danger. So something you don't see all the time. A lot of little black swan events going on. Couldn't really predict. Well, I guess maybe you could predict it a little bit. There were people calling for this, but like the big name stuff. I mean, BlockFi, no one would have thought there'd be any trouble with them. Voyager, no one would have thought there'd be any trouble with them. Even Coinbase is having trouble with this, and there's talks of Coinbase going out of business and going bankrupt because of things that they were trying to build out in their lending programs and DeFi. And it just seems like this whole kind of DeFi experiment that happened in crypto kind of crashed the entire market, and Bitcoin's going to go down with that. But as always, Bitcoin, it's not DeFi, might be some collateral from it. It'll make it out on the other end, still doing what it does. And in a few years, everyone will be complaining that they didn't hold their Bitcoin. And we can see all of these kind of articles, and it's weird that it's always in increments of 10x, which is just kind of crazy. But you can see Bitcoin falls below $200, the lowest price since 2013. And then it fell below $2,000, which was scary, and everyone hated that. And now it's plummeted below $20,000 for the first time since 2020. So it's always going to crash. That's the whole entire theory, right? Bitcoin always crashes, but it crashes up. Like at this point, at 2013, when it crashed to $200, that was a time when, people thought $200 was massively just a big move down for Bitcoin. Looking to the future a few years, everyone wishes they would have bought Bitcoin at $200. Same thing here. 2K, big kind of amount of money where people are like, this is insane. Bitcoin's dead. Bitcoin can never recover. You go fast forward a few years, and now it's never going to recover from $20,000. So there's probably a decent little chance that in a few years, Bitcoin plummets to 200,000. And that's going to be a time when people have the exact same fears they're having right now. But the big thing with all of this is that if all of your decision making and everything around Bitcoin has to do with the price, then you don't really understand Bitcoin all that much, because fundamentally, like we've said, nothing's changed with Bitcoin. It still does what it does, produces a block every 10 minutes, self custody. That's going to be a major thing everyone needs to do. So this is something right now with everything we're seeing with Celsius collapsing, 3AC on the brink of collapsing pretty much, and now even the name brand guys of yield farming and interest rate platforms, take it off. Just take it off, put it into cold storage, self custody, your keys, your coins, not your keys, not your coins. You don't want to be the unsecured creditors in these kinds of companies if things should go massively wrong and they were doing their business wrong and they were massively leveraged. If they go bankrupt, your funds are their money, which is the big problem. So anything you have on these platforms, take it off, put it into cold storage, or at least into a software wallet, something that you can have custody of, and you don't have to worry about paying off someone else's bankruptcy, because that could happen. The risk is not worth the reward anymore. The APY, the interest rates, they are not worth the risk anymore. They have plummeted, and it's really not worth it to risk any money on these platforms anymore. But we can kind of look at this right here, which we were talking about, the liquidation hunting, which this is part of it. This is the total liquidations in Bitcoin. You can see 145, basically $146 million in liquidations the past 24 hours. You can see recently, I mean, massive spikes here, continued kind of good size spikes, and more massive spikes recently. So this liquidation hunting is going on. People are going out to try and liquidate people, to try and force them to sell, to either one, get cheaper Bitcoin. You force them to sell, you can buy cheaper Bitcoin, or two, do that as well, but you also get paid for forcing liquidations. It's kind of a weird system. They literally have bounties. If you can force liquidations, you get part of the percentage, because these platforms charge a fee if someone gets liquidated. So say you have the margin out on something, you have $100 margin, and then you get margin call, you get liquidated, you would pay a fee, say 5% fee, so you'd pay $5 on top of your liquidation because you got liquidated. And if someone bounty hunted you, they could get maybe half of that, and they get $2 for hunting you and making you get liquidated, because they make money, the platform makes money, and you lose money. And this is something with Celsius. We know Celsius, major kind of pains, stopped withdrawals, froze withdrawals, is having maybe a little bit targeting here. And this is something that I'm trying to pay attention to. Dylan LeClaire has done a great job kind of talking about it, talking about all these platforms and problems they're having. Right now, the liquidation level at 14,000 per coin. So with prices drawing down, maybe this is something that people are targeting, because this would liquidate a lot of Bitcoin, like $500 million. So this could liquidate quite a bit of Bitcoin. It's wrapped Bitcoin on a DeFi protocol. All of these things seem to be imploding right now. And if 14K is the target, I think if people are hunting this, they're going to try to get the price down to here. Can it happen? I mean, maybe. Hard to really say, but in a market like this where macros are extremely uncertain, people are already panicking and selling. If you can add on top of that, pushing the price down, probably not that difficult. So if you could do that, liquidate these guys, push the price down even further, and then buy up Bitcoin, because it's going to be cheap Bitcoin. Then you've achieved your goal of liquidation, buy up the massively on sale, discount, cheap Bitcoin, and then kind of go on as usual. And a lot of this has to do with the Three Arrows wallet, the 3AC kind of crypto hedge fund guys saying that they're dangerously close to liquidation on Aave. $226 million worth of wrapped ETH, pledged to borrow $186 million of Tether and USDC. Back of napkin math. So ETH liquidation between $1,050 and $1,000. We're below that now, so meaning that they could have been liquidated. And if they're liquidated, that's a lot of money forced to sell, pushing prices even lower. Still has an effect on Bitcoin, because all these guys have wrapped Bitcoin to try and yield farm, to provide more yield, provide more interest for their customers, but in a way that isn't sustainable, and it's all being exposed right now, and everything's collapsing. I mean, Luna, Terra collapsed. Celsius seems like it is on a pretty big verge of collapse. A lot of these platforms seem to be not in a great spot of these yield offering ones, which is why if you have any crypto on an interest gaining platform, a yield farming place, if you're not prepared to lose it all, you should probably self-custody it as fast as you can before these services pause withdrawals like Celsius did. The biggest problem for something like Ethereum is this ETH and staked ETH, which is the ETH 2.0 stuff. People stake them. It's supposed to be a 1-to-1, so 1 ETH equals 1 staked ETH. And you see this has to do with Celsius borrowed 300 million of stable coins against 450 million staked ETH locked in Aave. And what they would have to do is, because they're getting liquidated, they're forced sellers. This draws this down from 1, meaning 1 ETH is 1 staked ETH, to now 1 staked ETH doesn't equal 1 ETH. So the peg is broken. We saw how that turned out with Terra. Not very good. We can see right now, too, right here, this number right up here, 0.9447. So it's still under a 1-to-1 ratio, still kind of moving down. Not good signs for people are being forced liquidated. It's breaking these pegs. It's going to be just a very vicious cycle. But on the brighter side, Bitcoin trends is up. We have it's Bitcoin being kind of Googled and looked at the most it has been since May 16th, around there, middle of May in 2021. So just over a year. Bitcoin's more in the mainstream now. It's just on the opposite end. Instead of making new all-time highs, it's making lower lows. So going in the wrong direction for now. But whenever you have moves like this, people are obviously going to look it up, kind of see what's going on with Bitcoin, why is this happening, and they're going to talk about it. But for right now, the price of Bitcoin under 19K, not ideal price-wise. Probably don't want to stay in this range too long, because the longer we are underneath the previous all-time high, maybe the more problems that arise from that. But apart from the price, Bitcoin didn't change, fundamentals didn't change, the hash rate's still doing its thing, the network still doing its thing, processing a block every 10 minutes being put on the blockchain. So, you know, ideally what's going to happen is just kind of go through this period of pain. And it's not fun. No one likes it. It's not a good time. But ultimately, this has to be done off the macros that are going on, where the Fed massively tightening. This is the first time Bitcoin's been through something like this. I mean, we see the stock market not in a good place. The bond market, the most secure market that's not supposed to be volatile in any way, not in a good place. So literally nothing is in a good place right now. So you can't really blame Bitcoin. It's a risk asset too, so it's getting hammered. So Bitcoin in a little tough spot. You know, we don't want to see it in these price levels underneath its previous all-time highs. Ideally, get back up to 19.5. Worst case scenario probably is if these bounty hunters are actually out here and hunting the Celsius bounty, they might very well try to push the price down to $14,000 to liquidate Celsius, to push the price down maybe even further than that, and probably scoop up a lot of Bitcoin at those levels, because they would achieve their goal from going on. So if that's happening, if there's bounty hunters out there, I mean, it's looking more and more likely that if they're going after Celsius, that maybe they can actually get it done. Only time will tell, but what we do know is keeping a long time horizon on something like Bitcoin has always been the better move and the best move to make, and just kind of buy it with money that you don't have to think about, don't have to worry about, and can put it away for at least 4 years. And that has been a good strategy historically. We'll see if that holds up. But as always, that's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.